Good evening and welcome to Let's Just Talk. I'm your host, Hami. We are excited to be here today. For those of you who have continually watched our series, you may notice that there have been some major changes to our channel, from the location to the set. Our production has officially moved to Northeastern University in Boston, Massachusetts. As always, we are here to bring you an important and pressing topic. The topic being discussed today all revolves around digital currency. You know, the cryptos, NFTs, and all things blockchains. And for our entrepreneurs and business-minded folks, we will be discussing startups and how you all at home can start your own businesses. To offer their perspectives and give insights into these topics, we are joined by David Shu and Lucas Espada. David specializes in crypto and Web3 at Forest Road. Before joining the team, he led the crypto working group at Wellington Management from 2017 to 2020 and was a community manager at Nanton. He co-founded the Northeastern University blockchain organization and advises on blockchain strategy here at Northeastern. David is also a chartered financial analyst and graduated from Boston College with a BA in economics and communications. He is pursuing his master's in computer science at Northeastern. And our other guest, Lucas Espada, is a fourth-year undergraduate student at Northeastern University with a concentration in entrepreneurship and a minor in interaction design. He founded ShowNxt, a mobile app that helps underserved soccer players get recruited to college. He also worked as a product management co-op at Goldman Sachs in 2021. Currently, Lucas serves as the CEO of Idea Northeastern, a venture accelerator that supports over 500 active Northeastern ventures. This year, the team piloted an event called NEXPITCH that sold out a crowd of 560 attendees and directly led to the funding of an idea venture for $650,000. As you all know, you can't get on your phone or your computer or any sort of internet-related things without seeing an ad or something about cryptocurrencies these days. And most people are throwing their hats in the ring. They're investing their life savings and all their money in this thing called crypto. But a lot of us don't know what it is. Dave, could you help us understand what cryptocurrency actually is?
Yeah, definitely. So I've been involved in crypto since 2017. I first got attracted to it because it was sort of like an alternative form of money. At a really high level, you can kind of just think of crypto as just any sort of database technology. It's just, you had the internet, and now crypto is another way of transacting value on the internet. And you're seeing a lot of stuff like Bitcoin come through and Ethereum as well, that are all these different types of crypto. But then you're also seeing NFTs, which you can have digital art. You can have, in-game video game items as things and collectibles. And so I think this market is just going to explode because now you can finally transact value on the internet, whereas previously, if you created a piece of music or if you created some sort of digital art on the internet, it was not yours and you couldn't actually prove ownership. But now with crypto, you can prove ownership on the internet, and that just kind of transforms like the whole perspective. And so that's why I think there's a lot of people that are really excited about it, and I think it's definitely going to be the future.
Okay. So you've mentioned a couple of things here. You've mentioned ownership, you've mentioned internet, you've mentioned webs, and all these different things. So to someone who knows nothing about all of these things, those are just big words. Is crypto money?
Yeah. So there are cryptocurrencies that are trying to be money, like Bitcoin and Ethereum. And then there are other cryptos that are trying to kind of be execution layers, or kind of, I guess you can call it processing power, which would be sort of like a Solana or a Near protocol. And so basically there's kind of different forms, and there's kind of cryptos that are trying to be like databases. So you've heard of maybe like Filecoin.
Yeah.
They're basically trying to be like distributed storage. And then you've got crypto gaming companies, you've got crypto collectibles. So it's just different kinds of things, similar to how in the internet you've got Microsoft, which is kind of like a software company. You've got Apple, they make phones and hardware. You're seeing a lot of that happening in crypto too, where it's not everything is just cryptocurrencies. You've got different companies, you've got different projects, they all do different things.
So I know crypto falls onto the category of what we call Web3. So there has been different revolutions of the internet, basically, or what we understand today as the internet. There was Web 1, there was Web 2, and Web 3. And for our audience's sake, Web 2 is basically what we know today as the internet, such as like the Google, the what else? The Microsoft and all these different things.
Yeah.
Right? And then this idea of Web 3, this new revolution, is where crypto or blockchain falls into, right?
Yep.
And so can you help us understand how this new revolution or idea of web came about, and what the difference is between Web 2 and Web 3?
Yeah, definitely. So Web 3 was a term that was coined by Gavin, the founder of Polkadot. And basically the difference between Web 2 and Web 3 is that in Web 2, which is kind of what we have now, you don't own anything, right? Like the data that your personal data that you have with Facebook owns that. If you decide to leave Facebook, none of that data comes with you. All the friends and all the time that you spent on Facebook, that stays with them. All your search history, it's owned by Google. All your email, if you use Gmail, that's all owned by Google. You can't really take that with you. And basically what Web3 is it's a brand new internet layer that's built on blockchain. And what blockchain enables you to do is to actually keep ownership of everything that you have on the internet. So when you use like a Web3 platform, you use it, you have all your information, all your transaction history, all the communities that you have built. When you want to leave that platform, you just unplug your wallet and all of that comes with you. And so the platform doesn't actually own anything. And that, if you kind of think about what that enables, it enables like a ton of creation, because now you can have, the creator economy, for instance, like the YouTubers or whatever, right? Like that's $100 billion economy. And YouTube has the sole discretion of basically deleting your account, no questions asked. But with Web3, they no longer have that power, right? And so there's no one who can really control what you can and can't do. And if you just kind of think about that, like it just kind of opens up a ton of avenues for kind of creation, because now you can kind of create your own content. You can go out and you can sell it on the internet, and it's yours and it's verifiably yours. And so you can leave, you can sell that stuff, you can take it with you wherever you want to. And that just kind of opens up like a ton of opportunities.
So basically, the difference between this Web 2 and Web 3 is that in Web 2, which is the internet as we know it right now, which includes the Googles, the YouTube, the Facebook, the Instagram, are all owned by a small conglomerate or group of people. Whereas this new revolution that we're still trying to understand right now is allowing stakeholders, meaning anybody who uses their own cash or money, dollar, or whatever sort of currency you use, to purchase this crypto in the blockchain, which is the Web 3, allows stakeholders to own that piece of whatever it is they're buying.
Yeah, exactly. You kind of like share in the upside of whatever community they're participating in. So like example would be, YouTube. The only reason that they're really successful is because there's a lot of people that are going on there to create content. Okay. But the content creators, they don't really get, they're not getting like a share of YouTube. They don't really participate in the upside of YouTube. But in sort of like Web3 type ecosystems, what happens is oftentimes users are rewarded based on their activity. So like you kind of participate in a network, you upload a video, and you actually will then receive tokens or cryptocurrencies of that network. So you kind of own a piece of that network. And so it incentivizes you to kind of like, it just kind of like aligns interests, because now like the users they're also owners and users. And so they share in that upside.
Okay, so to help our audience understand a little bit more of the kind of thing that they're investing in by taking their hard-earned money and putting into it. So basically by investing in crypto, the idea is that you are providing a ledger maintenance service, right? So basically when you take, let's say $200 and you invest in Ethereum, which is a cryptocurrency, there's so many of them, there's like over 16,000 or something like that. And you are making a bet, just like you make a bet in the stock market and say that I believe that Google as a stock is going to be successful. So when you make a bet that Ethereum as a crypto is going to be successful, you are paying for like the maintenance of that, what is it called? Of that
The
network,
Exactly.
right?
Yeah.
And you're also paying for the computing power because it takes like computer power or electricity to keep these networks running. And then they reward you by giving you tokens based on the amount that you're at the market price that you're buying it for.
Yeah.
Okay. And then how do people make profit off of that?
Yeah, so I mean, you kind of just, you buy low, sell high is sort of like the analogy. But honestly, like I kind of view it as, it's very just like venture, it's very similar to kind of like venture investing. These projects, they all have like founders, there's developers and teams that are behind them. You can kind of assess like which teams are kind of have like quality people who have experience, like do they have a lot of developers? Are they good at marketing? Do they have like a solid business plan around like how they're going to launch this token? And so I think it's becoming easier and easier to kind of identify like which projects are like really good. And it's similar to kind of like if you were to buy, stock of Amazon, or if you were to buy stock of Google, you can kind of know like which companies are real and have people building stuff, and which companies are just kind of, I would say like vaporware. And so that's generally like how I've been kind of investing in this space. There are other currencies like Bitcoin where it's more about kind of like hard money. And so Bitcoin is trying to be like gold. And so I think like a really good analogy that I like to think about with Bitcoin is like a lot of people, you can kind of compare it to what the sort of market cap of gold is. So gold is like a, $8 to $12 trillion market cap. And Bitcoin right now is, like less than $1 trillion. So if if it gets to where gold is, that's basically like a 10 to 12x from whatever today's prices are. And then I also think that Bitcoin, I think like people kind of view it as like, or the way that I view it is like, it's sort of like Uber, what Uber did to the taxi market. So Uber didn't come in and basically just like compete with the taxi market. They came in and they actually grew the taxi market, because now like you can hail a car like anywhere, in any city. It doesn't have to be, all the taxis used to be predominantly in like New York, LA, but now you can go into like a small town and there's like a vibrant Uber/Lyft economy. And so if you kind of think about like Bitcoin being like, just a way better version of gold, and gold is kind of like this historical way of storing your wealth over time. Now you can buy Bitcoin if you have a smartphone that has internet connection, right? Like anybody has that. And so, before the gold market, maybe there was only like a small percentage of people who could actually have access and buy this product. But now with like Bitcoin, because of the internet, you can magnify that market by like 100x. So I'm pretty bullish on Bitcoin. I think like, I think it might sound a little bit crazy, but I think the price of one Bitcoin could be $1 to $5 million per Bitcoin in like 10 to 20 years.
Wow.
Yeah, so it's got significant upside from here.
Thank you for that. So we'll circle back to you and ask more questions, because I'm sure our audience and ourselves has like a million questions about this topic. But you mentioned venture, which made me think of you, Lucas. So we're going to talk about, for our entrepreneurs out there and business-minded people, what is a venture? What is a startup? Can you help us understand that from the basic and simple perspective of it?
Sure. Thanks for the question. That was awesome, by the way, Dave. Like, I learned a lot in just that, which was so cool. But yeah, a startup is pretty much, so for me, I think you'll talk to a lot of different people and get a lot of different definitions. So I'll give you my definition, and I'll give you the more commonly accepted definition. For me, a startup, a venture, is something that you are genuinely passionate about that you could see pursuing for the rest of your life. That's what a venture is. This show that we're on is a venture. It's something that is exciting, you have passion for, and you can spread that passion to everybody else who touches it. A startup is different than a business, and a startup is different than a small business. And the biggest difference in that is scale. So people say, right, I want to start a pizza shop. That's a great small business, but it's not a startup until you start thinking about how that pizza shop could impact millions and millions of people. The difference between a small business and a startup is scale. If you wanted to talk about a startup, it has to have something small. Let's take the example of a pizza shop. Maybe people within the Boston area who like eating pizza. Great. Now you have identified this market. the difference between how you'd approach a startup and a small business is if you were in the mind of a small business, great, I have these people in the Boston area who love pizza. Let me make something to serve them and them alone. If I want to create a startup, I say, great, I have these people in the Boston area who like pizza. Let me make something that can serve them and then serve everybody in the world who likes pizza.
Okay.
And that's what a startup is. It's identifying something that exists as a problem and understanding how you can begin to solve that problem on a larger scale than what you have in front of you.
Okay. So yeah, my follow-up question was going to be about what it takes to get a startup going, and you already started explaining that. So do you want to elaborate more about, let's say there's somebody at home who's passionate about, crypto or something like that and want to start their own business on it. Are there steps that they can take to start their business? I'll just let you give us a spiel on that, and then we'll have another question for you.
Sure. I think there's a lot of factors in terms of building a startup.
Right.
But one thing that I've learned in my journey and that I continue to come back to is this idea of grip strength. So when you're a rock climber and you're trying to get to that next step, that next boulder, that next grab, it takes a lot of grip strength to keep moving on and keep getting up to the next level.
Right.
Startup is very much the same thing. You start at the bottom with practically nothing and you're trying to get to the top of this mountain. The reality is we as humans, most of us can climb that mountain with just a little bit of training. I'm not a rock climber, but the analogy goes, as long as we're holding on, even if it's just with one pinky,
right,
hold on, because times come, things change, team dynamic changes, the world, the market changes, things like crypto get introduced. But if you are passionate truly about something and you just hold on, I think that's the biggest thing that a founder needs is grip strength. Because the world of a startup and just the things that you go through are incredibly difficult. But if you know where you want to be in 10, 20 years from now, it takes a lot to hold on. But if you can, I think that's what makes a successful founder.
So basically, like Drake said, we started from the bottom. Right, now we're here.
Yeah.
Okay, so I also know that you're part of Idea Lab. Could you tell us a little bit about what that is?
Sure. So we're Northeast.
Not just part of, by the way. You're the president of it.
CEO is the term.
CEO is the term. Okay, big shot. Let's go.
No. But so yeah, Idea is Northeastern's student-led venture accelerator. I'm a student, and we're for students by students. We manage about 500 active ventures within Northeastern's ecosystem, and we basically help them go from concept to launch. And what does launch mean? Well, for us, that means raising capital up to $200,000, which we help do, and getting into the market. So for us, we have a 3-step process. It's ready, set, go. And each of these focus on different parts that are essential to building a startup.
Okay.
And ready is about the problem, set is about solution, and go is about getting to market. Although this is our model, I think that in general, this is the model that all startups should follow. It's so common that we'll get a company or a venture idea and they say, hey, like, I want to create the next app, or I want to create the next social media, I want to create the next Uber for pizza delivery, right? But so often we see founders jump to a solution before they've identified the problem. And because of that, the solution fizzles out. So we focus on the problem. The problem itself will never change. For me personally, right? Like my back hurts every time I sit down. That problem will probably never change in me. There's a million different ways I can go about solving that, but the problem of my back hurting when I sit down, that won't change. I could create a bungee cord to hold me off the ceiling. I could also create heat pads so that way my back feels better when I sit down, right? Like a million different ways to go about that, but the problem's the same. And that's what we focus on. Once you have the problem, we go to solution, and once you have the solution, we help you raise some money.
So ready, set,
and go.
Is it ready, set, go, or ready, launch, go? Which?
Ready, set, go.
Ready, set, go.
And then you get launched.
Ready is you have an idea. Because of that idea, what is the problem, right? That you're trying to solve. And then set is what is your solution to that idea. And then go is now that you've identified the solution, what steps do you take to get to where you want to get to? And then what Idea Lab does is it helps you raise funding.
Correct.
To get your thing done.
Correct. So we can personally, so Idea as an organization, we can fund ventures up to $30,000 non-equity grant funding. That is, non-equity means where you don't take any portion of the company. Grant funding means it's entirely on you. Like, it's just a donation, essentially. We fund anyone Northeastern affiliated. So that's undergrads, grads, faculty, staff, alumni. 60% of our ventures are actually alumni. Which is
So you're basically a bag of money sitting around waiting to be given out to people.
We love to give money. We love founding. We love supporting Northeastern founders. And anything we can do to help you do that, that's what we're here for.
Okay. And then you also mentioned that there is a way to get more money if you want to get funded. Could you tell us about that process and how you help people get to their goals?
Yeah, absolutely. So traditionally, right, so the way you get launched through IDEA is by raising $200,000 in external funding. Traditionally, in the past, we've helped connect people. We helped connect ventures to venture capitalists, angel investors, things like that. This year, we decided to take that a step further. We took 4 ventures who had been previously funded by IDEA, so they'd received up to that $30,000. And we put them live on stage in front of 4 venture capitalists right here on Northeastern's campus. It was an incredible event. We had a sold-out crowd, 560 people in ISEC auditorium. 4 ventures were pitching live to 4 angel investors for up to $2 million. That wasn't our money, that $2 million on the line. That was just us facilitating an interaction between venture capitalists. We had one venture walk away with $650,000, and it was just so awesome to witness live.
So, for our audience sake, what is a venture capitalist? Because for a lot of people, they hear capitalist and they're like, oh, money hungry folks. So you want to tell us more about that?
Yeah, absolutely. I think that goes in terms of the broader scope of investing and what are investors. So IDEA, we're an accelerator. We have money to give as grants. Other accelerators do take portions of your company. So right, you'll hear on Shark Tank, I'm raising $300,000 for 10% of my company. That 10% is equity. We don't take equity, so you'll find people that do. So IDEA, we give grants. There's angel investors. Angel investors, the term angel is because they're supposed to be this mythical person who helps you get from nowhere to somewhere.
Right.
These people tend to be one-off, like they're wealthy on their own front. Athletes, celebrities, past founders who want to support other founders. They give money from anywhere from $0 to maybe $300,000-$400,000. Venture capitalists, these are more established firms. So, right, like Northeastern as an institution, we're an institution. There's Glasswing Ventures, they're an institution.
Right.
There's so many. So, Bessemer Ventures, right? I can name whatever. But anyway, institutions, those are venture capitalists. They're not one-off individuals. They're people who have a team behind them who source and look for ventures, tending to raise more money. So $500,000 to $1 million, $1 million to $2 million, $2 million to $100 million. We just had a venture raise $120 million that graduated from IDEA, and that came from venture capitalists.
Right.
So venture capitalists tend to be firms with a lot more support behind them. Angels are one-off individuals who want to support a startup, and then you have accelerators who help you get to those initial places.
Gotcha. Thank you so much. So after hearing one another speak about what you do you think that there's any room for blockchain startups where we are right now?
Yeah.
Or is that how the idea of blockchain has been started?
Yeah, definitely. So there's kind of like a bunch of different avenues to raise money. I think right now you are seeing a lot of venture capitalists basically pouring a ton of money into crypto. I think last year there was like $25 to $30 billion of venture that went into basically funding blockchain crypto companies. And I think this year we've already seen like $10 to $12 billion raised to be deployed. So there's a ton of money going in this space. But I think beyond that, what's interesting about crypto is that like it is very similar to venture, where it's like basically it's like the way that these companies they're really early stage. They kind of don't really have like a fully fleshed out product yet. They don't really they're not really they don't really have something that's like very mature that they're coming to market with. It's kind of like an idea. But what's really interesting about crypto is that because of the way that you can launch a token, you can basically get your project is like instantly liquid, right? Because you can launch a token and then all of a sudden like you can sell that token and it's freely traded on the market. Whereas like with venture capital, it's a little bit more private. Like you can't really, if you invest in a startup, you can't really like, it's very difficult to sell your equity stake.
Right.
Because the market's not public. And so with crypto, there's actually like a way for, I guess there's good and bad because like, as you guys have seen, there's a lot of like rug pulls, which is basically like companies that just kind of like hype this project up, and then once the tokens come out, the founders just like dump the tokens on retail, and they kind of like disappear. And so that's kind of like the bad side of crypto.
Right.
But I think the good side of it is like you can also see companies that are launching that basically are fully funded from just like public investors, and they don't take any venture capital.
Okay.
And so it's kind of like depending on where you are. Some people kind of, if you're like a retail investor, you might view that as good because like now you can potentially get into, you can get into like Ethereum, or you can get into one of these like mega, $100 billion companies at the ground level.
Right.
Whereas like traditionally, you can only buy Uber after it's IPO'd. And at that point, the venture capital or the early investors have already made a ton of money.
Right.
And so you're kind of buying it at the end. So it kind of depends on like, what your perspective is.
Right.
I kind of view it as like, if you're smart and you're doing your research, there's a lot of opportunity in crypto because you can essentially get into a lot of these really good companies.
Okay.
At like the ground level.
So in a little bit, you started talking about the downside or negative side of cryptos. So in a little bit, we're going to get into that. But for right now, another thing that I want to talk about is for both people who want to start a venture or a startup or a business, and for people who want to invest in crypto, are there elements or factors that make certain individuals successful over others? Let's start with Lucas and then go over to Dave.
Sure. So in terms of a startup, people love to talk about risk, and risk as a word gets thrown around so much in terms of investing in a startup, starting a startup, because it's true. When you are starting a startup, you're not only risking going down a non-traditional path, right? So as a startup founder, you're inherently having to leave other responsibilities, a full-time job, a family, a sport that you love, classes that you want to work on. That's risky because you're not going in terms of what society says will set you up for success. So you're going down this path that you don't know where it will end up.
Right.
That inherently is risky. And as a founder, it takes a lot of grit, right? We talk about grip strength to power through that risk. There's the idea of social risk as well, right? People perceiving you as, I think when founders look to start a startup, the hardest part is starting, because so often you tell someone your idea and immediately people don't understand. People question it, people think it won't work, people will doubt you, and as an individual, that's really hard to cope with, especially never having experienced that before.
Right.
That's why VCs, venture capitalists, tend to invest in past founders, because they know that these people have been through it before.
Right.
So in terms of qualities that make a strong founder are very similar to qualities that make any strong individual. I like to compare it to athletes, right? So swimmer, I swam my whole life growing up and then also played soccer. Swimming is a very individual sport because it's just you in the lane lines. It's just you in the pool, you in the gym, you're alone in this, and so much is going on around you, but every day in that gym, you have to be focused on yourself. Same thing with the startup. You have to be focused every day on what your vision is 10, 20 years from now and be able to shut out all the noise around you. So qualities that make a successful founder, people talk about passion, people talk about love for what you're doing, absolutely. But underneath that, you need to be really, really mentally strong. And that doesn't mean you need to do it alone. A therapy is huge in my life. I think that a therapist is a massive building block to anything that anyone wants to accomplish. And having someone in your life to support you is extremely important. So passion, love, absolutely, but really strong mental will is what it takes to be a successful founder in my eyes.
Thank you for that. And then to our crypto expert.
Yeah. So I think I largely agree. I feel like a lot of crypto companies and crypto startups are basically, it's like the same thing almost. I would say that maybe it's a little bit easier in crypto because like you can kind of like incentivize adoption or usage of your protocol by basically like paying people tokens. And that's always like, it's always like a benefit because you're kind of creating money out of thin air and paying people to basically use your application. But I do agree with a lot of what he said, what Lucas said. You kind of, it is very like lonely as like a founder. And like there's that saying where it's like every great idea was always like crazy when it first came out, right? Like if you were the person buying Tesla in like 2011, when everybody was like talking about oil, and there's this one crazy guy who's talking about like electric vehicles, and like there aren't even, it's like we don't even have the batteries, we don't have the technology. Where are the charging stations? Like how far is this thing going to go? Like none of that makes sense. And I think like as a as a crypto investor, I definitely feel a lot of that. It's like if you were like talking about crypto in like 2018 during the bear market, like people just like didn't even want to like be friends with you.
Right. Thank you for that. Thank you so much. And then lastly, one last question for you all both. Do you have any advice for, the people at home watching right now, the people wanting to start a startup, the people wanting to invest in crypto or NFTs? Any last words?
Yeah. So I mean, with crypto, honestly, just kind of like, I think like jump in. That's what I did. I think like sitting back and saying like, oh, like what's this NFT thing? I don't really understand it, so I'm not going to get into it. Just like go and like, you don't have to buy like a Bored Ape, but you can buy like $100 NFT and like join that community, join the Discord, like participate, and you kind of understand, like now you understand like why people want to buy NFTs, right? Like if you don't understand DeFi, like just put some money into it, play around with some of these applications, and really get a feel for like what's going on here. And I think like once you do that, you start to really understand that like, okay, there's actually something here. It's creating a product, it's creating this ecosystem, and that's really, really special. And I think you're not going to learn that from just kind of like, reading papers and sitting from like afar and looking at it.
Gotcha. Thank you so much.
Yeah, that's awesome.
Lucas?
I'm going to do that today.
Yeah, for sure.
And I would just say dream for the impossible, but then break that down into one thing you can do right now. So if Steve, we talked about the crazy quote before. So Steve Jobs, he said, right, the world is only changed by people who are crazy enough to believe that they can change it. And that is so true. Like, if you wake up and say, I'm average, then you're gonna be average. But if you wake up and say, I'm gonna pursue and build the impossible, then that's what you're gonna do. And it doesn't take a creative genius to say those words, like, I will do the impossible. Anybody can say those words, and anybody can draw a stick figure. Anybody can put their phone down and record themselves doing something. So dream it for the impossible, but then do one little thing to get you there, and soon you'll be on your way.
Gentlemen, thank you so much for coming on my show. I'm so happy that you were my first guest in this new studio that we have, and I'm excited to see what you all end up doing in the future, and thank you for being here. It was great having the conversation with you.
Thank you.
Thank you.
Dude, great meeting you.
Yeah.
Thank you. Cool.
All right, how long was that?
I heard some class.
This is a good one. How long was that?